Assalamualaikum and good morning. My name is Noor Aisanakullah and my metric number is A23A2448. To begin our presentation, let's start with an introduction to lay down the foundation and scope of our report. First and foremost, auditing plays a vital role in modern business by ensuring the accuracy, transparency, and accountability of both financial and non-financial information. Ultimately, audit report provide the necessary assurance to stakeholders, giving them the confidence to make highly informed strategic decisions. To address this area systematically, our presentation is broken down into two main components. Part A focus on a detailed analysis of our selected company. We will be evaluating its financial performance, its recent audit opinion, and the direct impact that a modified audit opinion has on the business, and our strategic recommendation for future improvement. But we shift our focus to the public and social sector, where we examine the unique audit environment of non-governmental organization or NGOs. Here we will cover their specific regulatory requirements, value for money audits, often known as VFM audit, and the core difference between auditing an NGO versus a traditional commercial entity.
Assalamualaikum sir and everyone. My name is Nurshafika binti Asmi. My metric number is 823A1677. For part A, our group chose Tekna as Berhad. The analysis focused on corporate audit, reporting and stakeholder communication. So now I will be presenting the company background of Tekna as Berhad. Tekna as Berhad is a public listed company on Bursa Malaysia, stock code 2739, incorporated in 2006. Its main businesses is investment holding, and it operates through multiple subsidiaries. The group has diversified into technology and digital transformation, renewable energy, and food and beverage. Its key subsidiaries include Tekna as Aeropedo, HK Aerospace Pedo, and Crevit International, which manage well-known brands like TGI Fridays and Italians. The company is led by Executive Chairman YM Tunku Nakudin and supported by governance committees for audit, nomination, and remuneration. For the financial year ended 31 December 2025, the group recorded a loss of Rm 29.26 million and the company Rm 57.26 million, with no dividend declared. During this period, the group undertook corporate restructuring and major disposal to strengthen operations. The financial year was adjusted to cover 18 months from July 2024 to December 2025. In conclusion, despite the financial loss, Tekna X remains focused on growth, sustainability, and long-term strategic expansion. Next, I will be presenting the audit report analysis for Tekna X Berhad. The auditors LTTH PLT issued a qualified opinion for the financial statements ended 31 December 2025. A qualified opinion is given when there are certain issues, but they don't affect the overall reliability of the statements. There are two main reasons for this qualification. First, a scope limitation related to the HKB, disposal group, and cabinet. The auditors could not access their accounting record, so they could not verify the carrying values of assets and liabilities, cash flows, or disclosure related to these entities. This limitation also existed in their prior period. Second, a potential material misstatement concerns ordered receivable totaling about Rm 2.6 million. These receivables are under ledger recovery, and although management made provisions, the auditor found them insufficient under MFRS 9. They cannot verify the realizable amount. Additionally, the auditors note a material uncertainty regarding the group's going concern. The group recorded a loss of Rm 29.3 million and the company Rm 57.3 million with negative operating cash flows. However, this did not change the audit opinion but was disclosed to users' attention. In summary, the qualified opinion arises due to the scope limitation and potential misstatement, but the auditors concluded that the financial statement will present a fair value overall. That's all from my part. Thank you.
Next, let's turn our attention to memo to the Board of Directors. This section highlights a significant regulatory development concerning Techna X Berhad and outlines a serious downstream implication for the company. Looking first at the specific audit opinion issue, Techna X Berhad received a qualified audit opinion for its financial period ended 31 December 2025. The external auditors issued this qualification because they were unable to obtain sufficient or appropriate audit evidence regarding two major issues. First, the transaction involving the disposal of the HKAB group and its associate. Second, the recoverability of outstanding receivable amounting to approximately 2.6 million. Because the auditor could not verify this figure, it directly reduced the overall reliability of certain balances presented in the company's financial statement. Naturally, a qualified opinion carries serious baggage. Let's look at the immediate consequences that the board and management must now navigate. First, reduce credibility. The reliability of the entire set of financial statement is instantly weakened the eyes of the public. Next, increase scrutiny. The company will face a much higher level of intense scrutiny from regulatory bodies and incoming auditors. Next, spike in cost. Reminding these issues will lead to significantly higher audit and compliance costs moving forward. Next, financial friction. Techno X Berhad will experience noticeable difficulty in securing future financing from banks or attracting new investment capital. Next, lastly, reputational damage. Finally, it leaves a heavy negative effect on the company's broader corporate reputation. Building on the consequences of the qualified audit opinion, let's look at the broader impact on stakeholders. The results of modified audit opinion extend well beyond the board group, fundamentally affecting three main groups. First, we have shareholders and investors. For this group, a qualified opinion immediately results in lower confidence in the company's financial reporting currency. Interest arose. Investment risk premium rise, which often creates a direct negative impact on the company's share price and overall market valuation. Moving to the center, we see the impact on creditors and banks. Financial institutions rely heavily on clean, audited financial to assess creditworthiness. Because of the reporting uncertainties, banks are likely to impose much stricter lending requirements or raise interest rates. There were lingering concerns regarding the company's immediate financial stability and its capacity to meet debt obligations. Finally, we look at employees and business partners. Internal and external partners are heavily impacted by market rumors and corporate instability. For staff and key commercial vendors, this situation breeds genuine uncertainty about future business performance. This ultimately leads to reduced confidence in the organization long-term sustainability, which can hurt talent retention and strength of supply chain relationship.
Hi, my name is Nurfa Fatia binti Abdullah and my matrix number is A23A2484. Following our analysis of the 2025 external audit report, it is clear that while the group remains a diversified technology and F&B player, we must address specific financial reporting and liquidity hurdles to restore stakeholder confidence. Our goal is to move from the current qualified opinion to an unmodified opinion in the next cycle. Here are our 4 core strategic recommendations. Our first priority is resolving the primary scope limitation regarding our foreign asset, which is fulfill the condition precedents. We have already fulfilled the waiver of approximately 14 million ringgit owed by directors. The board must now establish the dedicated task force to clear the remaining administrative and regulatory hurdles in Hong Kong to ensure the 45 million ringgit share sale agreement for HKAB is completed within the next cycle. Next, formalize evidence of loss of influence regarding the associate company which entered bankruptcy in August 2025.
We must submit official court document and an independent legal opinion to our auditors. This will demonstrate our loss of access and control, allowing for a clean derecognition under MFRS standards. Second, remediate MFRS 9 ECL methodology for legal receivables. The auditors flagged 2.6 million ringgit in receivable as having inadequate impairment provisions. First one is individual impairment assessment. Management must stop using a simplified matrix for these specific items. Instead, we recommend a case-by-case individual assessment for these legal balances as required by MFRS 9 for credit impaired assets. Next, independent legal audit. We must engage our external legal counsel to provide written probability-weighted estimates for the recovery of each case. If the recoverability is deemed low, the board should proactively authorize higher impairment provision to ensure our financial statement reflect a realistic view of recoverable assets. Third recommendation is implement the 12-month liquidity and cost containment roadmap. To address the material uncertainty related to going concern, we must act on our unsustainable burn rate. As of December 2025, cash on hand was only 277,000 ringgit, while cease operation alone incurred 13.4 million in expenses. Aggressive expense management. We recommend centralizing procurement to leverage volume discount and standardizing high-cost process in the F&B segment, such as tableware cleaning and utility management. Next is capital injection execution. The board must prioritize the execution of the proposed private placement and other fundraising initiatives to bolster cash reserve. We must also implement weekly cash flow forecasting with strict triggers for remedial action to prove our solvency to auditors and creditors. Last but not least is standardized internal controls for foreign operation and joint ventures. Finally, we must learn from the inaccessible partner issue as we pivot toward AI-driven municipal solution in China, which enhance joint venture oversight. The Audit and Risk Management Committee ARMC should mandate that any joint venture agreement includes unfettered access rights for the group's auditor to all financial records. Then expand internal audit scope. Our outsources internal auditor, Talent League STNBHD, should have their scope expanded to include quarterly compliance review for foreign-based operations to ensure they adhere to MFRS and group-level internal control manuals. By executing this step, we will not only clear the current audit qualification, but also strengthen the group internal governance and operational resilience. This is the roadmap to restoring Tekna X's reputation in the capital markets. Thank you.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Ira Shafira binti Kamarizal and my metric number is A23A150H. So, today I will be presenting on the Tara Foundation, focusing on its background and how it delivers value through education. Tara Foundation was founded on 10 January 2002 by Datuk Ardip Kumar Kukreja in Malaysia. It is a registered non-governmental organization under the company limited quarantine and it's fully tax exempted. The foundation was established to address educational inequalities faced by children from underprivileged B40 communities, providing them with a fair chance to continue their education. Its mission is zero dropouts. This means that ensuring that no child from these communities is left behind due to financial or social barriers. Tara provides free tuition in key subjects including Bahasa Malaysia, English, Mathematics and Science. To make learning more accessible, tuition centers are strategically located within Program Perumahan Rakyat or PPR housing areas, which reduce travel difficulties for students. The foundation also provides structured lesson plans tailored to each student's ability level, helping them reach their full learning potential. So, in terms of governance, Tara Foundation has a clear structure. The Board of Directors oversees strategic planning, resource allocation, and regulatory compliance. Program coordinators manage the daily operation, deliver co-curriculum, and monitor the progress of each student. Volunteers play a critical role by teaching, mentoring, and supporting community educational activities. Finally, Tara Foundation complies with all Malaysian NGO regulations and financial reporting standards, and all contributions from donors are monitored by independent external auditors. This ensures transparency, accountability, and proper utilization of funds to benefit the students. So now, let's discuss how Tara Foundation ensures the effectiveness of its programs and how its performance is assessed through value for money or VFM audits. VFM audits evaluate whether resources are used efficiently, economically, and effectively to achieve the organization mission. In Tara cases, the audit assesses if the Foundation's zero dropouts mission is successfully implemented and whether children from B40 communities benefit from the tuition programs. Auditors use quantitative data such as student attendance, academic achievement scores, progression statistics, and retention rates. By comparing current and historical data, auditors can identify trends and measure improvements in learning outcomes. In addition to the numbers, qualitative methods are also used. Structured interviews, surveys, and focus group discussion with students, teachers, program coordinators, volunteers, and parents help assess the quality of teaching, the suitability of the curriculum, levels of student engagement, and the overall impact on academic experiences. Observational assessments are conducted by visiting tuition centers to see lessons in action. Auditors check if resources are being used as intended, verify engagement of students, and ensure that staff and volunteers are following proper procedures. So, in these slides, internal controls are reviewed as well. This includes monitoring approvals, resource allocation, activity tracking, and proper documentation such as lesson plans, student files, and progress reports. Linking financial expenditure to actual program outcomes allows stakeholders to see whether Tara Foundation delivers measurable educational benefits. Through triangulating all this information, quantitative, qualitative, observational, and financial, auditors can confidently evaluate whether Tara maximizes its resources, achieves its objective, and continuously improves its program. Finally, these audits provide donors and stakeholders with assurance that their contributions are well managed, programs are effective, and students are receiving the support they need. It also guides the foundation in making strategic improvements and planning for future initiatives to enhance its educational impact.
Assalamualaikum. My name is Nonu Jubatakia binti Yusof. My matric number is A23A2457. Now, let's see. This comparison shows that NGO audits and commercial audit have different priorities. The Tara Foundation audit focus on accountability, regulatory compliance, and ensuring that donor funds are used effectively to achieve social objectives. In contrast, commercial audit primarily focus on providing assurance that financial statements present a true and fair view to support the interests of shareholder and investor. Commercial audit mainly focus whether the company is generating profit for shareholder. However, NGO audit, such as Tara Foundation audit, focus on stewardship and compliance. Auditor must ensure that donated funds are managed transparently and used only for the intended social purpose. Unlike commercial audits that concentrate on financial statement, NGO audit also evaluates value for money. Auditor assess whether resources has been used efficiently and whether the organization has achieved its intended social impact. Commercial audit report mainly provide assurance to investor and shareholder. In contrast, NGO audits are accountable to donor, regulator, sponsor, and the community. Therefore, maintaining transparency and public trust become a key responsibility. In conclusion, auditing in the non-profit sector play an important role in ensuring transparency, accountability, and operational effectiveness. Unlike commercial audit that focus mainly on profitability, NGO audit adopt a broader approach by assessing whether resources and used efficiently to achieve a meaningful social outcome. Through value for money assessment, auditor can determine whether the organization is fulfilling its social mission. Ultimately, effective audit practice help NGOs maintain public trust, reduce financial risk, and sustain their positive impact on the community.